Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
Much like the ants at the picnic, fraudsters also know when the food's gone and they don't stick around. So we do two things. We detect the fraud, but then we also create a deterrent for the fraudsters to come back because they know that you're protected. They will come back and they will hit, and sometimes they'll get through. And when they do, right, we own that fraud, but we learn quickly, we shut it down, and they move on.
That was Ron Hynes, the CEO of Vesta, and he's our special guest this week. This is episode 94 of the Leaders in Payments podcast, and I'm your host, Greg Myers. And hey, before we get started, if you happen to office in Houston, Austin, or North Texas, check out Fuse Workspace, where their mission is to help others do more. Check them out at fuseworkspace.com. Okay, back to the show. Ron lives in Connecticut and was born and raised in Maine. He's married and has 3 kids, 2 in college and 1 that just graduated from high school, and 1 little dog to round out the family. Vesta uses advanced machine learning to assess the validity of card-not-present transactions. They provide their customers a thumbs up if the transaction is good and obviously identify the fraudulent ones. The company has been around for 25 years and has 300 employees. The company has locations across the U.S. and Dublin, Ireland, Mexico City, as well as an office in Singapore. Ron and I had a great discussion about fraud in general, as well as fraud in developing countries. We also talk about his passion for financial inclusion stemming from his journey in payments with Chase and Mastercard. We've got a great episode today, so let's get started. Hi, Ron. Thank you for being here, and welcome to the Leaders in Payments podcast.
Hey, thanks for having me. I'm excited to be here, Greg.
Great. So let's just dive right in. Tell our audience a little bit about yourself, maybe where you grew up, where you went to school, where you currently live, a few things like that.
Sure. So I live in Ridgefield, Connecticut, which is in Fairfield County, about an hour north of New York City. I'm a Northeast guy through and through. I was born and raised in Maine, lived there all my life, went to college there, and left, in the late 80s, I guess. I'm dating myself, but in the late 80s, moved to Boston, didn't move that far away, and went to business school at Northeastern University, and have been mostly in the Northeast since that time. I'm married, it'll be 26 years in July. We have 3 children, 22, 20, and 18. My youngest just graduated from high school, so empty nesters, I guess, at this point,
Nice.
Are close to it. And we have 1 little dog as well. And we're a pretty tight-knit group. We do lots of things together when we can, but everyone's off doing their own things. 2 in college, soon to have 3 in college, and, on with their lives. I grew up having grown up in Maine, probably the greater New England area, you have no choice but to be a diehard Boston sports fan. So I lived most of my childhood through the lows of being a Boston sports fan with the trials and tribulations of certainly the Red Sox and the Patriots. The Celtics were something to cheer about, and the Bruins on occasion. And then I've also had the good fortune as an adult of living through some of the better years of being a Boston sports fan with the Red Sox and Patriots now, having quite a good run over the last 15 or 20 years.
Yeah, I guess things changed a little when your quarterback left and decided to go to Tampa, huh?
Yeah, listen, it's like in any business, right? I always tell my people, I just had someone leave recently, and they were almost apologetic and somewhat upset that they were leaving. But I always tell them that one of my biggest goals is to create opportunities for people to grow and prove themselves. And if we can't continue to challenge them and they get presented with better opportunities, then by all means, I think they should pursue them. And it's one of the things that I'm most proud of is when people that I have worked with, coached, mentored, and developed move on and do great things in other places. And that's kind of like Tom Brady, I guess. He had proven himself time and time again and needed a new challenge. And so I'm happy for him. Good to see him have success elsewhere. I might have felt different if the Patriots were in the Super Bowl and he beat the Patriots in the Super Bowl, though.
Yeah, I'm sure you would have.
I might not have been quite so magnanimous.
Well, I'm an Auburn guy, and you guys have a couple of our quarterbacks there, so hopefully
Yep.
Cam will do something good this year.
I hope so. I was hopeful last year. Hopefully he's fully healed now.
Yeah, let's hope so. Hey, we'll talk about your professional journey in a minute, but let's go ahead and talk about the company Vesta. So tell the audience what Vesta does.
So Vesta is I like to say, a 25-year-old startup. I took over just about 2 years ago as CEO, where we use advanced machine learning to assess the validity of card not present transactions. So we inline in a transaction flow. Our customers send us a transaction. We look at it and we assess whether or not we think it's good or bad. If it's good, I'll simplify it. We go back with a thumbs up and our customer approves that transaction. If it does turn out to be fraudulent, we're so confident in what we do, we indemnify them. So we own that risk at that point. Our customers are guaranteed to be paid once we tell them the transaction is good. Equally important at assessing fraud, we assess the good transactions as well. And generally, our customers think of us as a safety net against fraud and a partner in growing revenue as we ensure that more good transactions get through, are approved ultimately, than what they would do on their own or what they were doing with their current provider. But as I said, we've been around for 25 years. We are about 300 employees, a little over 300 employees. We have a good amount of people in office locations in Portland, Oregon, where the company's based and where the company was founded, in Atlanta, in Dublin, Ireland, Mexico City. And in the last 12 or 15 months, we opened an office in Singapore as we accelerate our effort in Southeast Asia and beyond. And then we also have sales development resources in many markets around the globe.
Okay. Are there certain verticals within the card not present space that you tend to have more customers in?
Sure. So the company grew up in the telco space. And 25 years ago in America, in the US, the prepaid cellular market was very different than it is today, where you used to get scratch cards and scratch a number off and you'd call in and you'd add minutes to your prepaid cellular phone. There's still a large prepaid component to the mobile telco industry. We work with some of the largest players in that industry in the US and around the world. And so we have a big chunk of business in telco. And then we also have expanded beyond telco into the broader card not present space. In financial services, we work with money remitters, so cross-border remittance or domestic remittance. Again, assessing a transaction in real time and determining the validity of it in our assessment so that our customers can get protection from fraud and also ensure they get more transactions complete.
Okay. And do you go to market through direct sales force, through partnerships, or some of both?
Yeah, we do both. We have what we call strategic channel partners. We work with, I'll give you some of the more recent ones. Credibanco is a large provider in Colombia, and we've integrated directly into them so that they can provide our fraud engine as their fraud engine to their customers. That's been quite successful for us. Both PayMaya and PayMongo in Southeast Asia, in the Philippines, have done the same. And we are rapidly onboarding customers through both of those partners. We have a large payment provider, payment processor that we will announce in the coming weeks that we will start with in Latin America and have expectations and hopes that that will become a global relationship. Again, where we will integrate directly into them so that they can provide our fraud solution directly to their customers. In this case, in Latin America, it's north of 50,000 merchants. But we also go direct. So, you mentioned telco, or I mentioned telcos. We work directly with AT&T and T-Mobile, Rogers up in Canada, America Mobile, Telcel across all of Mexico, everything everywhere in Europe, Vodafone in a number of countries in Europe. And we've got a partner we've recently launched and recently signed and will be launching in the Philippines, again, in probably a 60 to 90 day time frame. And, happy to come back and share that with you once we're able to talk about it.
Sure. So it sounds like you've really grown a lot internationally.
We have. And certainly when I came on 2 years ago, I decided that where I think we add the most value is where customers or prospects have the hardest time approving transactions for fear of fraud. And they either don't have the wherewithal or don't have access to providers And also it creates an opportunity for us where we add more value. And it's in any business, the more value you can add, the more value you can extract for your company and your shareholders. And so we made a conscious decision to focus in what I'll call more of the developing markets. And then the other component of that, Greg, is that with our telco legacy, the prepaid mobile market in outside of the developed world looks a lot more like it did in the US 10 years ago, where there's far more fraud, far lower approvals, and a much greater preponderance of in-person top-up locations, which are very expensive for telco partners. And so we use that as a land and expand strategy so that we can land with what we know and expand into the broader card not present space.
Okay, and you mentioned the value you bring, so that kind of leads to the next question. What would you say differentiates your company from your competitors out there?
Sure. So what we focus on and what we talk a lot about is helping our customers drive the true cost of fraud to zero. When you think about fraud, a lot of times people will talk about chargeback rates or things like that. But when you really unpack the true cost of fraud, yes, it's the chargeback itself or the actual realized fraud, which depending on where you are, may be anywhere from 0.5% to 2.5% to 3% of retail sales. But then there's also the cost of whatever tools you put in place to try and do a good job in avoiding fraud, right? And that'll end up being, for every dollar of fraud, you'll probably spend another $2 or $3 trying to prevent fraud. And then there's the actual cost of processing chargebacks and things like that. And then the biggest component is actually the opportunity cost, because out of fear of what might happen, what most merchants do, and in fact, I was just looking at a request for a proposal earlier this week from a provider in Latin America, and it's a large appliance retail opportunity, and their approval rates run between 35 and 50% because of their fear of fraud, right? And so when we talk about driving the true cost of fraud to zero, what we're talking about is, listen, fraud is a full-time job. I always like to share people a story from a long time ago when long before I was even at Mastercard. I was working at either Bank One or JP Morgan Chase, and I got invited to a Visa conference. And they had the head of security or fraud get up and give a presentation, and he talked about a fraud ring, I guess you would call it, somewhere in Eastern Europe. And at the time, Visa probably had 4,000, 5,000 employees, and this fraud ring had 10,000 employees. So there were more people going to work every day, punching in a clock and going in and trying to perpetrate fraud than there were trying to make sure that the network was up and running. And so, when you think about that and you think about merchants and their fear, it's a real fear, right? When you've got someone whose full-time job is to try and defraud you, what you need is someone whose full-time job is to keep you safe working on it. And so that's really what we focus on. But I think more importantly, we are very focused on helping our customers grow their revenue. And a lot of times you say that and it almost sounds hollow. Hey, I'm Ron from Vesta. I'm here to help you grow revenue. But it's really what we do. If we can take a merchant that's got 50% approval rates, and for the same cost of their realized fraud today, if we can help them because we're better at recognizing good transactions than they are, not just recognizing fraudulent ones. If we take them from 50% approval rates to 75% approval rates for no incremental cost, I've just grown their revenue 50%. It's pretty compelling when you think of what we do in that context.
What are typical approval ratings or rates, or is there such a thing as a typical rate?
Honestly, it depends on many things. Unfortunately, you can only be as efficient and as good as the amount of fraudulent transactions that come through, right? And so we have customers where we consistently are at 98, 99, approaching 99% approval rates. And we have customers that we've been working with for a couple of years where we started out when we took over, they were in the mid 40s, and today they're in, the 80 to 85% range. And it's kind of two things. One, yes, we're better, but the good thing about fraudsters they're persistent, but they're also quick to act. And so it works for you and it works against you. It works against you if you've got a hole and they find it and they're almost like ants at a picnic. You know what it's like. You get the family together, you go to the beach, you set up, you're all ready for a big picnic, and you get the food out and everyone's happy, and all of a sudden there's an ant. And then before you know it, there's 10, and then there's 100, and then there's 1,000. Because, they send out the signal and they tell all their buddies, hey, listen, there's food here. Get here quick because we don't know how long it's going to be here. That's what fraudsters are like. But much like the ants at the picnic, fraudsters also know when the food's gone and they don't stick around. So we do two things. We detect the fraud, but then we also create a deterrent for the fraudsters to come back because they know that you're protected. They will come back and they will hit, and sometimes they'll get through. And when they do, right, we own that fraud, but we learn quickly, we shut it down, and they move on. So to give you a typical, what's a typical approval rate? It's hard to say. And it also depends on the market. One of the things that I think in the US today, across all of e-commerce, you would see approval rates in the low to mid 80s, generally speaking. You get outside the US and it's going to run, in the low 70s. And you will have the more sophisticated, the larger merchants will drive that number into the 80s. And then you'll have the smaller merchants that will be running in the 50 and 60% range without help.
Right. Okay. Where do you see the payments industry, or if you want to just sort of caveat it, the fraud industry, where do you see that heading in the next, say, 2 to 3 years?
Yeah, sure. What I love about the space, and I'll talk more generally about payments and then bring it back to fraud as well, is it really never stops changing. And certainly over the last 10 years, the evolution of the payments landscape is nothing short of amazing. I think you'll see more and more payments being initiated and ultimately fulfilled in what you and I today would likely consider non-traditional or alternative methods. Things like real-time payments that flow more directly from an individual's bank account. They've begun, right? You've seen a lot about that recently, more on the B2B space, but I really believe in the US and around the world, you're going to continue to see more of that. Wallets as a conduit for payments, but also probably more important as an instrumental relationship management hub. When you think about, we're seeing the advent and build out of what people call super apps, particularly in Southeast Asia, where consumers can run their entire lives in a single app.
The WeChat kind of concept.
Yeah, WeChat, Grab, others. And what you're starting to see somewhat of a move to that here. When you start to see Uber moving into things like Uber Eats, and that's a logical progression into how much more can we do. But as all this continues to happen, again, back to fraudsters, this also means that fraud and those that perpetrate it will continue to adapt. Much like water, they'll find the path of least resistance. And, anytime you advance technology on one front, you open up opportunities for someone to compromise those advances on another front, which means merchants and really all customer-facing businesses need strong partners, companies like Vesta, to keep them safe, but also at the same time, continue to allow them to maximize every customer interaction. And that's where, back to what I said earlier, that's why the mindset of approvals is so critical in what we do, because, businesses, large and small, spend an awful lot of money to drive awareness and ultimately drive traffic to their storefront, their website, whatever, however you want to think about it. And if you do all that, you've done everything right, only to decline 2/3 of the customers that come to see you out of fear or lack of, wherewithal. It's a short recipe for disaster for any business.
And as terrible as COVID was and COVID is, I would think that was a tailwind for you, right? All the traffic going online.
Yeah, it's funny. When I was at Mastercard, we spent a lot of time exploring wallets. And I'm going back 10 years, right? Google Wallet back in the day and even the early iterations of things like the Apple Wallet and others. And there was a time when telcos were gonna disintermediate companies like Mastercard and Visa, and then it was the telcos, and then it was all the tech companies that were going to do it. And we could never have built I grew up in classical packaged goods, so I think about classical packaged goods marketing and promotion campaigns, but we could never have built a sampling program as effective as COVID did for contactless and wallet payments and online shopping, because humans are creatures of habit. Habits are hard to break until you're forced to. And COVID forced people to have to shop online. And I guess for better or worse, the time period was long enough that new habits have been formed and people won't go back. And so we had some great tailwinds in our business, as did a lot of folks in this space. But really, there's not a marketing mind on the planet that could have come up with a better sampling program than COVID delivered for the payments industry.
Yeah. I would agree with you 100% there. Well, let's switch gears a little bit and talk about you. And you mentioned you became the CEO there about 2 years ago. So maybe talk about your journey and sort of your career and how you got to that role.
Sure. I am a classic brand product marketing guy from the outset. I spent time at places like Cadbury, Schweppes, and Coca-Cola in product management and field marketing roles, and found my way into financial services at the old First USA. I went there to start a new group called Strategic Alliances, and through that ended up having the opportunity to go take over a nascent business at once Bank One bought First USA, and it was called Stored Value. And I moved my wife and my kids out to Chicago and took over the stored value business and became passionate about the power of what stored value, and which a few of us in the industry collectively got together and changed the name from stored value to prepaid, but the power of what that could do from a inclusive opportunity to bring affordable and effective financial services to those that need them most. And I was in and around that business for the next 15 plus years. I left Chase and ended up at Mastercard in the prepaid business. I ran the North America and then the Americas group, and eventually ended up running the entire global prepaid business. I took it over. It was still quite a small business. Put together an aggressive strategy, presented it to Ajay Banga and the board, and got everybody's support. And we had a great run, great success. I ran it for a little over 4 years. It was about 5 or 6 times the size it was when I took it over when I left. The team there has continued to do great things. But it also cemented my passion for innovation and payments. When I left there, I actually ended up I took over a little bit of a turnaround, a rush card, and what was a recapitalization effort became a strategic sale. I sold it to Green Dot. And that's what led me to the opportunity, or to have the opportunity, to come in and take over at Vesta. The founder of Vesta, Doug Fieldhouse, reached out to me and asked if I would come spend some time and help he and the board think about what might be possible at Vesta. And so I came on a interim basis, learned about the business, met with customers, dug in, started to understand the technology, and felt like there was a sleeping giant here that we needed to unlock, and presented here's what I would do to the board. And the board said, hey, we like that idea. Just one question, would you come and run it? I said, well, let me think about it. And I flew home, met with my wife, and we talked about it. Felt like the right thing to do. And I guess the rest, as they say, is history. And it's been, a phenomenal 2 years. The amount of work that we've done, the amount of momentum that we've created. Again, I referenced earlier that we opened an office in Singapore. We actually opened the office about 14 months ago with one person. We had no customers in Asia at the time. Today, we've got over 1,000 merchants that we're working with directly or indirectly. We've got a number of, as I teased earlier, a number of large-scale partnerships and direct customer integrations that we'll be able to talk about here in the coming months. And we've seen that same kind of momentum everywhere that we are today in the US, in Latin America. And, I couldn't be more excited. I've got a great team working alongside me. They really are the smart folks in the room, not me. And I've got great partners. We raised some new capital last year. Goldfinch Partners are our owners and great partners. They've been terrific to work with. And so that's kind of the journey. That's how I ended up here, and really excited about where we are and what we're doing, and, excited for what the next 6 to 12 months will unveil for us.
Okay. What are some things you're passionate about? So maybe pick one work-related thing and one personal thing.
Yeah. So, we'll start with Vesta. I'm passionate about culture at work. And the team here has heard me say it 100 times in the last month, probably. Listen, I think talent only gets you so far. You've got to work with good people. And we make a real concerted effort to ensure that we surround ourselves with good people that can thrive in our environment and can thrive in our culture, which is a culture of partnership and empowerment and passion and courage, right? Each and every day. And I will continue to drive that at Vesta and anywhere else that I end up. I just think it's absolutely essential to be successful, to have the type of culture that people can and want to work together. And I guess on the more personal front is kind of two things. Listen, and it probably goes without saying, everyone is, but family is everything. I continue, even working 85 plus hours a week, to put family first, never missing an event, never missing a significant date. And, but then you heard me talk also about financial inclusion. It's something I became really aware of, the trials and tribulations of, kind of living on the fringes in the US when I was at Bank One and Chase. And, our prepaid business was really a payroll card business. And we expanded it from there. We actually did, in conjunction with Visa and Safeway, which is now the Blackhawk Group, we actually did the first instant reloadable card available at a point of sale. We sold it behind the service desk at 100 Safeway stores in Arizona at the time. But then, as I arrived at MasterCard and really got to turn my sights on a more global view of financial inclusion, the work that we did with governments and large corporations around the world to make, sometimes people confuse financial inclusion with just putting a tool in someone's hand. But when you go to a developing country and you realize that most everyone's pay is done in cash, and the boss shows up on a Friday and they might pay you what they owe you, or they might pay you half of what they owe you, and you really have no recourse. You can take what they give you or take nothing. And what we were able to do in conjunction with large corporations and governments around the world at MasterCard was to bring a level of transparency to pay that made it impossible for someone not to get paid what they were owed. And, I'll continue to do that. And I actually believe that a large degree, what we're doing at Vesta is also a form of financial inclusion, more on the side of small businesses around the world. We're enabling them to maximize every dollar of investment by ensuring that when someone does actually come and want to buy, that if they are a valid customer, they're able to buy and not limited because an individual merchant lacks the resources or wherewithal to properly assess whether or not a transaction is a good transaction.
Right. Makes sense. And I know MasterCard's a big proponent of financial inclusion. And
one of the things I'm proudest of, I as part of our first prepaid strategy at MasterCard, or, when I took over, financial inclusion was one of the three major planks of our strategy. And it went from being a strategy for prepaid to being a core component of MasterCard's strategy. And they have hit it out of the park. They do such a great job of, not just talking about it, but actually investing and building the tools for governments, for corporations, and even for individuals to be able to gain and have access to affordable and effective financial tools.
I think people would be surprised. I don't know the percentages, but I think people would be surprised how high those percentages are, even in the U.S., of people who are underbanked or underserved or are not included in our, right? It's a bigger number than you would think.
Oh, yeah. No, it's double digits percentage-wise in the country. And it's getting better. Listen, I think one of the first things we did at RushCard, and you see a lot of people doing it today in these challenger or neobank spaces, but we started giving our customers access to their payroll the moment that we got notification from the clearinghouse network that a deposit was on its way. As opposed to having to wait until Friday morning, it gave our customers anywhere from 2 to a day and a half early access to their earned income and to the pay that was coming. And, when you live on the edge like that, that might be the difference in having to visit a payday lender or not, getting the money a few days earlier. And now today there are companies I work with a company in Canada called Payfare, and they're focused on the gig economy. And they work with Uber in Canada, they work with Lyft here in the US and others. And they can see what you, Greg, as an Uber driver in Canada, have earned up to that point, and they give you access to it whenever you want. And they actually advance the money to you. And then on payday, they get paid back for what they've advanced you, and you get the remainder of that. But again, it's not just 2 days. It might be real-time payment. You might complete a trip and say, you know what, I need to put gas in the car. Let me cash out now. And it's they charge a small fee for that, not a percentage, a small flat fee. And it's a tremendous asset for that consumer, and has been a tremendous asset even for the companies that partner with companies like Payfare to provide that to their, whether it's Uber drivers or employees as well.
Right. Well, as someone who's been in the payment space for quite a long time, I'm curious your answer to this next question. And I go back in payments 16 years or so. And when I started, I just kind of fell into the industry. It certainly wasn't my career path or choice, but I haven't left it yet. So there's something to say for it. But I'm curious. So kids these days can take fintech courses and get into payments, and it's a hot, sexy industry, a lot of money invested in it. What would your advice be to someone who wants a career in payments and they're coming out of college? What would you tell them to do to be successful?
Yeah, listen, I don't think payments is any different than a lot. I mean, there's the uniqueness of it, yes, but my general advice to anybody is, and I, again, say it to my employees as often as I can, make mistakes, make lots of them, and learn from them. And, at Ajay had a saying used to talk a lot about thoughtful risk taking. Don't take risks that are going to cost the company tremendously, but take thoughtful risks. That's one. But make sure you learn from them, but don't be afraid. If you look at the smartest, most successful folks in industry, they've all had many failures, and, some big and some small. I make mistakes every day. And so don't be afraid to make mistakes. And then the other is take risks when you're young, early in your career. I think too many times, and I think kids today are far better, certainly than we were as a generation. And I'm probably 3 generations removed from today's workforce, but don't be afraid to take risks, especially when you're young and early in your career. Personal risks. Make a move. Don't always take the job that gets you the most money. Take the job that is going to help you grow, going to help you learn, or more importantly, do something that makes you happy and that you're passionate about. I was fortunate. I spent a lot of my career in that financial inclusion realm, which was something that I got up every day excited to go to work and figure out, to be melodramatic, how are we going to save the world today? And it gets harder and harder the older you get to start to try and take some of those personal risks, because the risk and reward calculus just gets harder to justify, particularly once you have a husband or a wife, when you have kids and you have people who are counting on you. You can't take a flyer, and you can, but it's not just yourself you're impacting. So I would say make mistakes at work, break things, and take risks. Take some personal risks, especially when you're young and early in your career.
Okay. Well, Ron, we've covered a lot of ground so far, covering Vesta and the industry and a little about you and your journey. Is there anything else you'd like to add before we wrap up?
No, listen, I really appreciate you taking the time to speak with me and to learn a little bit about Vesta. We are 300 plus talented, passionate people with one goal, and that's continue to drive the true cost of fraud to zero for our customers. And we'll continue to do that and look forward to, hopefully, Greg, hopefully we can catch up again sometime soon.
Yeah, I hope so. Thank you so much for being on the show today. I know your time's very valuable, so I really appreciate you being here.
My pleasure. Take care.
And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.